Greetings everyone. In this video, we'll be discussing the Dow Jones Industrial Index, getting down with the Dow. Stick around. Okay, before we get started on this chart, a little bit of a history on the Dow. This was founded in 1882 by Charles Dow and Edward Jones. In 2010, 90% of the subsidiaries in this Dow were sold to the CME Group, Chicago Mercantile Exchange out of Chicago, Illinois in the US. It is comprised of 30 companies, 30 large companies, and it is not calculated by market cap of these companies. It's calculated by, it is price weighted on its calculations. I'm going to drag over the definition here for the Dow Jones because I think it's important. The value of this index, and this is again versus the ES 500, the SP 500, which is the ES, or the NASDAQ, which are market cap related. So here is the value of this index is the sum of the stock prices of the 30 companies included in the index divided by a factor as of September 2020 was 0.152, and it's currently April of 2021 right now. The factor is changed whenever a constituent company undergoes a stock split, so the value of the index is unaffected by the stock split. So you can imagine a company such as Apple having a stock split, or Tesla, which has a high price point, would really impact the way the Dow Jones moves. So just one stock, and there's only 30, so it's going to have a huge impact. And of the 30 companies, let's just take a look at some of the companies in here. Here are some. This is just a list of the 30. There's no sort on here. It's just a listing of them. But take a look of this is something that's really interesting. We have Apple, technology company. We have United Healthcare, so we have healthcare. We have Home Depot, building services. Goldman Sachs, finance. Microsoft, another tech company. Visa, finance. We have consumers. We have a travel company with Boeing, and we have a couple of industry companies right here. This is a list of 30 of them, but I was just pulling up a few here to go over the difference. So it is really it's a real conglomerate of all different industries together. So Dow Jones Industrial Average, that kind of gives it that explanation. So let's take a look here. As I mentioned, this is extremely volatile. So having something, an indicator to assist you in the Dow Jones, you need to be really careful and really pay attention to what you're using. For example, I'm just going to throw a moving average on here, and I have this one set at a 20 moving average. And as we can see, it's all over the place. It is really hard. I have it set to change color if it's ascending or descending to make it easy to read. But this is all over the place. How are you able to make good reads on that? It's moving average is really tough. Longer you'll be getting really whipped around, and longer the price will be bouncing all over the place before it goes and breaks. And if it's shorter, you'll be crossing like crazy. It's just not going to be a good scenario. So what we look at instead of is we can look at something with like a Bollinger Band. It gives us a little more leeway where we can use these bands as it gets as it gets widened out, and then we level off. We can use it going back to the mean of the band, and I believe this is set to a 20. Let's see, this is set. These are just standard. Yeah, this is set to a 20 average Bollinger Band as well with these deviations. Another one you can use is Keltner channels. They're a little bit more accurate by looking at the same chart. If we pull in the Bollinger Bands right over it, a little tighter, but we have a lot of breaks. We can see like the Bollinger Bands are going wider here when this is dropping off, whereas the Keltner channel is coming down with it. So that may be an option. A third option, if you're using VWAP, for example, would be a VWAP using standard deviations. And I have this set to, I believe it's 1.5 and 2. So the first set of bands is 1.5 deviation, and then 2 deviation here. So this is pretty much the same. You follow these down to the green area and get them on the retrace. It's the beginning of the Asia market, so I wouldn't put too much stock in there. Would wait for a couple of hours before we start getting into these bounces and retraces. Can also get it if it's coming across VWAP going to the other side. Again, those are strategies, up to you to find a strategy that works for you. So what can we use? Well, since it's volatile, we'll be making a lot of new highs and new lows. We're not so much concerned with the choppiness in the middle of that section. So we're just going to look, this is just an indicator that plots if you're making a new high. We have a break of a high right here, maybe a stop out, quick little break here. So we're taking these for just a few points a piece on this scale. But you can see that it does hold pretty well. Here's a low of day, and then we have all the chop, and then it's bounced off the low of day here, did not break it, starts going up again, maybe a point that you want to play a reversal, or you may want to play the break if this gets broken down, combine that with some other factors. So let's take a look at another one. Here's a volatility stop. So this one here you're going to use as a stop if you're in a long position. You can use this as stop losses, or you can use them as bounces. So if price comes down and hits and then retraces off the other direction, or reverses, off the other direction, you're going to go long when it bounces off of here. And once you have some, like this here, we have some red. Once it breaks through and reverses, maybe a place you want to take a short. Going along with that is the SAR. This is parabolic SAR. It's parabolic support and resistance. I actually like to play these a little differently. I like to play this as a break. So if I'm watching this going here, I would have a short, a sell short as a stop right here, and then waiting and waiting and waiting. And as you can see, as I'm following it up, I'm moving my sell position up. It finally breaks right here, and we can take some points off of it. The same with the long positions. I'm going long, 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 but there's no entry yet. And once it finally breaks through, here's a long, I'm going to take a few points that way. That's just how I use the parabolic SAR. Everybody's different. Do your own research. Pivot points are actually something that is pretty good because they're levels, right? They're levels that don't change. And you know what the pivot points are right at the beginning of the market. As soon as the market opens, these are calculated based on using the previous day's open, high, low, close prices, and they run it through a formula. These are traditional pivot points. I haven't seen a platform yet that does not have pivot points available to the trader, but we can see that these are pretty good at giving you at least areas that you can look at and potentially play along with. I actually made this one here called a pivot zone. It's pretty interesting. It gives you a zone where if you're breaking in and out of the zones, you can see it's in the zone right here and then comes up on a reversal. That's a nice place to play it. Here it enters the zone and leaves the zone. A nice place to play a short. Here's a break, but this is most likely the way I play it would be a stop out right here. It's not really coming in or out of the zone. It broke through and then retraced in. So anyway, just an example I wanted to show you. Now because this is so volatile and we're looking at a 10-minute chart here, you may want to look at a longer time frame. So if we go to a daily chart, let's put this daily chart up here. You'll notice that as we go back, it's all broken up. It's because I'm on the Y, I'm on the M contract for 2021. If we simply take this and we use a continuous contract, so it would be the YM in this platform, it denotes the continuous contract with just this is the year forward and an exclamation point. You'll see this on the left here is all filled in now. So this is the daily chart for the Dow. And we can see that even though if it's daily, we have some pretty good markers that we can use. We have a high here, and then as we break and run for support and resistance, we have some consolidation right here. After it comes down, breaks up again. It's still pretty volatile with a lot of wicks. Again, these are daily candles, so just be careful. That's the point I want to drive home with this video, is the volatility. It's 30 companies in this index. It's liquid, so you'll have no trouble getting your fills and getting in and out of trades. Let me go back to, let's go down to a 3-minute chart for a moment to get it really small. Now, here on a 3-minute chart, we have some areas that we can play on some breaks. Okay, they're smaller moves because it's a smaller time frame, and we are using our volatility to our advantage in this scenario. We don't care if this is bouncing around. We want this to finally break and hold. Okay, this is just something to take into consideration instead of using I was just on a 10-minute chart before, but consider looking at a smaller time frame. And finally, one thing additional thing to consider, instead of using regular candles, let's use Renko candles, for example. Okay, now Renko candles are time time agnostic. It doesn't matter. I have these candles set. I believe it's on 10. I'm using just the traditional boxes. So every 10 points, a new block is formed. You can figure out how to read learn about how to read Renko charts, but it takes the noise out. Okay, it takes the noise out. So if we take, let's say, this candle right here, the next candle is not going to print until we've had a move of 10 points or more. So if this is in this area, in this time frame, is moving 6 points, 7 points, 8 points, back and forth, up and down, volatility like crazy, it's simply not going to print another candle. You would not even know what is going on because this candle is just going to be sitting here. So you may want to use this for some breakout plays, right? We may want to take a look at a high here and then play that break. Well, here's a new high, a lower high, a lower high. We might want to put entries on here. Once it finally cracks, it's going to run. What if we did that with lows? Here is a low and it retraced. Once the low broke right here, we take that. So Renkos are a little different. They tend to keep you out of the noise. So you can see this is the whole day. Let's look at a couple candles. I'm going to look at the time frame down here at 7:15. The next candle was 7:15. The next candle was 8:06. So from 7:15 here to 8:06 here, so nothing happened. We can see it's a little bit of a wick and came up. That's a long time for 10 points here, right, to move. So what's the next one? 8:30. There's a half hour. So we're going from 7:15 to 8:30. There's only 3 candles. That is an hour and a half of volatility and choppiness that you do not need to be involved with. Maybe set a break right here where this came down, potentially. Put a sell right here. And put a stop maybe 10, 15, 20 points away right here. So if you have a short right here with a stop loss right here, once it breaks, we had some retracement, and then you did pretty good with it. Again, it's just use your own style, use your own strategies, but I just wanted to give you examples of the Dow, show you the volatility and some of the reasons behind it. Any questions? Leave them in the comments below. We'll be happy to answer you. Good luck, and like always, keep your risk managed.